Hi Feroz, I remember last time we have spoken and you told me that Forex is not a good idea for passive income as it requires you constantly to work on it. I've heard a lot about people who make tons of money, so I actually consider doing that full time. Can you give me a crash course on what actually affects the Forex so I would know what I get myself into?
Okay, before we get into Forex or any other investments, as we have discussed, you need to learn a little bit more about the industry. There are about 8 factors that directly affect the Forex industry. And before you get into a full-time job, let's have a look at what they actually are and what you need to know.
Cool, I'm glad you're always here before I rush into things.
Okay, that's great. Now let's start with the inflation. And actually, everything starts with inflation. This is the main component of the economic activity. How is this related to the Forex, so you may ask? Pretty simple. A country with consistently lower inflation rate exhibits a rising currency value, while a country with a higher inflation typically sees depreciation in its currency and is usually accompanied by higher interest rates.
Okay, so low inflation rises the currency value of the country and high inflation decreases the value of the currency. Got it.
You see that the inflation is an interesting and the most important one. And the other rates that will directly be affecting Forex trading is the interest rates. Increasing in interest rates cause a country's currency to appreciate because higher interest rates provide higher rates to lenders, thereby attracting more foreign capital, which causes a rise in exchange rates.
Okay, so high interest rates are equal to higher value of the currency, opposite of the inflation.
Yep, something like that. On top of that complication, we need to look at the country's ability to pay the balances. A country's current account reflects the balance of trade and earnings on foreign investment. It consists of a total number of transactions, including its exports, imports, debts, etc. A deficit in its current account due to spending more of its currency on foreign products than it is earning through sale of exports causes depreciation. Balance of payments fluctuates the exchange rate of its domestic currency.
Oh wow, the complication has suddenly escalated. Can I access the balance of payments of any country?
Of course you can. It is publicly available information, so as it's the government debt. Government debt is public debt or national debt owned by the central government. A country with a government debt is less likely to acquire foreign capital, leading back to the inflation. Foreign investors will sell their bonds in the open market if the market predicts government debt within a certain country. As a result, a decrease in the value of its exchange rate will follow.
Looks like a domino effect. One thing leads to another. Okay, are those all the factors which affect the currency value?
Now you see the problem with the Forex trading? It's not just about buying and selling currencies, but it's about understanding how each of the economies would actually work in comparison to the other economies. You would need to watch the economic statements by the countries and know what they are up to. Related to current accounts and balance of payments, the terms of trade is the ratio of export prices to import prices. Next one on the list would be a country's terms of trade. When it improves, its export prices will rise at a greater rate than its import prices. This results in higher revenue, which causes a higher demand for the country's currency and an increase in its currency value. This results in an appreciation of the exchange rate.
So apart from knowing the financial terms, I would need to even predict or use historical examples of how the terms of trade will impact the economy. Speechless.
You see the complication with the foreign exchange? So look at the biggest impact that could have on Forex trading is when a country experiences a recession. Its interest rates are likely to fall, decreasing its chances to acquire foreign capital. As a result, its currency weakens in comparison to that other country currencies, therefore lowering the exchange rate.
To be honest, it doesn't seem like fun at all. I have to be glued to my chair at all times, staring at the screen and doing the research, not just 9 to 5, but constantly.
It is definitely hard work. And when people say they make easy money, most likely that they are lying. We were discussing the economic impact on Forex, but there is also a political one as well. A country's political state and economic performance can affect its currency strength. A currency with less risk of political turmoil is more attractive to foreign investors as a result, drawing investments away from other countries with more political and economic stability. Increase in foreign capital, in turn, leads to an appreciation in the value of its domestic currency. A country with sound financial and trade policies doesn't give any room for uncertainty in the value of its currency, but a country prone to political confusions may see a depression in exchange rates.
Oh my goodness, there is a political part to it as well. It's like you need to have a degree in political science and economics to actually make money on this. Unreal. Okay, just out of curiosity, is there anything else apart from political economical? Who am I kidding? I'm sure there is.
Now we are getting to my favorite part of the Forex trading, which is the speculation. If a country's currency value is expected to rise, investors will demand more of that currency in order to take a profit in the near future. As a result, the value of the currency will rise due to the increase in demand. With this increase in currency value comes a rise in the exchange rate as well.
Yeah, mate, thanks for the crash course. I'm sure there are some people whose personality actually fit Forex trading, but it is certainly not me. Makes you think that you need to be careful with all those social media millionaires who claim to make a quick and easy money on the Forex.
You see, you definitely didn't expect that outcome. So now let's summarize our conversation. All of the factors determine the foreign exchange rate fluctuations if you send or receive money frequently. Being up to date to these factors will help you further evaluate the optimal time for international money transfer. To avoid any potential fails in the currency exchange rate, opt for a locked-in exchange rate service, which will guarantee that your currency is exchanged at the same rate despite any factors that may influence or an unfavorable fluctuation. Hopefully, this was a fantastic example for you.
Hey guys, I hope you enjoyed the videos. As always, there are 3 people behind those videos, which is Firouz, Kerry, and myself. Please reach out to us if you have questions or if you want to make some content of your own. Like, share, and subscribe so it gives us encouragement to make more videos like this one.